and welcome to Tax Matters. I am Chiamaka Ohauchi. We are here at the venue of the opening ceremony of the 9th Country Correspondence Meeting of the African Tax Administration Forum, ATAF. This meeting has its focus on taxation of the informal sector. In fact, it's the first meeting of such, attracting experts from across the 38 member countries of ATAF and development partners. Over the 3 days of the conference, tax officials and experts gathered together in Abuja to work at building cooperation between tax administrations and to discuss the informal sector in African countries and to find ways to overcome the impediments with a view to finding solutions, as well as bringing the informal sector into the formal economy and into the tax net. The informal sector remains a tough nut to crack for tax jurisdictions all over the world. Over the years, tax jurisdictions have devised various ways of bringing operators in the informal sector into the formal economy with varying degrees of success. In a report released in April 2018, the International Labour Organization, ILO, estimated that as much as 85.5% of employment in Africa is informal, whereas the proportion is 68.2% in Asia and the Pacific. Within Committee of Arab States, the percentage of informal employment is 68.6%, 40% in the Americas, with the lowest of 25.1% in Europe and Central Asia. The International Labour Organization went further in their report to estimate that 2 billion persons, more than 61% of the world's employed population, make their living in the informal economy, and that 93% of the world's informal employment is in emerging and developing countries. So the task is, how do we migrate the informal sector into the formal economy and bringing the operators into the tax net? Mr. Logan Worth is Executive Secretary of ATAF.
It is estimated that the informal sector in Africa constitutes between 21% on the one end and 70% of GDP on the other hand, depending on which country you look for. And this accounts for between 30% or 90% of total employment in the region. So the informal sector has a huge impact, not only on revenue collection, it has a huge impact on employment. It has a huge impact on income distribution. It has a huge impact on how social services gets delivered. It has a huge impact on our broader society. So for us, looking at the informal sector is very, very important. And while it may be argued that taxing the informal sector may yield low income or low returns in the short term, the benefits are worth the effort. Bringing businesses into the tax net instills a tax-paying culture in the businesses, which ensures tax compliance when businesses expand. Taxing the informal sector is also critical in ensuring a perception of fairness in the tax system. The informal sector is not just a sector of the illicit economy. The informal sector is not just a sector of the mamas and the papas selling fruit and vegetables on the road. The informal sector are also in the medical field, the informal sector in the hairstyling field. The informal sector is also in the clothing industry. And these sectors have no need to be informal. And if we have a system that formalizes them, bring them into the tax net, then the economic system can build infrastructure for them. And so that will be the theme, Mr. Chairman, of the next 3 days, together with a discussion on the institutional framework of ATAF as an organization.
On the taxation of the digital economy.
Somebody said to me, how can you have a taxi business without owning a car? That's Uber. Somebody also said to me, Mr. Chairman, how can you own a hotel business without owning a single building? That's Airbnb. And they are making huge economic strides across the world, including in our countries. But we cannot find them because they don't live here. So we cannot tax their economic activity. And so that are part of the challenges on the formal economy side. Today, the world is gathering over this period in Paris to discuss how to tax the digital economy. Nigeria is a massive market. E-commerce and social media platforms is widely used in this country and is widely used on the continent. Global mobile telephone is the biggest on this continent. And so what does that mean for revenue and for economic activity? Because now companies can do business in our countries without having a presence here. And so when it's Airbnb or Google advertising or Facebook advertising.
The ATAF conference was the first official engagement of Mr. Muhammad Name as chair of ATAF.
The objective of this meeting is to assist ATAF Secretariat to develop, among other products, a comprehensive handbook with practical guidelines to ATAF member countries on how to tax the informal sector.
Mr. Nami dwelt at length on the characteristics of the informal economy, while insisting that taxing the sector is a tax that must be done.
The informal sector in Africa constitutes between 21% to 70% of the GDP of African countries and accounts for between 30 to 90% of employment in the region. Yet, despite its large size, the sector remains one of the most difficult sectors to tax, with most of the businesses operating in the sector concealing their activities from tax authorities wherever they operate. Such businesses also operate on a cash basis and maintain a poor and no accounting records. Most of the businesses in the sector are also small and fragmented, making it inefficient for the revenue administrators to enforce compliance. It may be argued that taxing the informal sector may yield low returns in the short run. However, the benefits are worth the effort. Bringing businesses into TaxNet will instill a tax-paying culture in the businesses, thereby ensuring tax compliance when the businesses expand. Taxing the informal sector is also critical because it will ensure that there is a perception of fairness in tax system. Those who operate in the formal sector deem it unfair to have to pay taxes, while those in the informal sector do not. You have the formal sector paying taxes, or the workers, particularly the civil service workers and the state and local government workers, paying taxes. You have people in the informal sector that do not pay taxes but use the infrastructure that the formal sector taxation have been used to build. So the formal sector taxpayer usually feels shortchanged in circumstances like this. So we should do our best, strategize, exchange information, deliberate on this kind of injustice, and advise our revenue authorities or the government of our countries on how to address them. Furthermore, in some instances, enterprises within the informal sector create unfair competition for those operating in the formal sector. This reduces the income generated by the formal firms and also reduces the taxes paid. So it's a very serious issue that we should collectively look at and see how it can be addressed. Taxing the informal sector may also be a way of promoting good governance and political accountability of the state, because tax strengthens the social contract between the citizens and the government. In this way, informal businesses that contribute to tax revenues are likely to assert their rights to receive certain services from government, thereby ensuring national development and accountability.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams, FEET, on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate TCC. Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
For better understanding on the issue of taxation of the informal sector, Tax Matters spoke to some of the delegates. What are the impediments of taxing the informal sector in your country?
I would say like the major impediment to taxing the informal sector in my country is the fact that the majority of the people that are operating in the informal sector, they make up the large section of voters. So there is political unwillingness to really touch them. And maybe the other impediment is that as a country we don't have geo-mapping, so it is difficult to locate most of the taxpayers based on their location alone. And maybe the other impediment is the fact that we are mostly a cash-based economy.
First of all, the people in the informal sectors, they are not registered, so you cannot trace them. They don't have traceability, so it becomes very difficult for the taxpayer to follow them and also to tax them. Secondly, we see that most of them, they don't have any records, or they don't keep records of accounting of their activities. Hence, it also becomes very difficult for the taxpayer or the customs to come and tax them, because they don't have the basis on how much should they tax them. And also we see that thirdly, most of these informal sectors, some of them, they operate in the streets. So it becomes very difficult. Today they are here, tomorrow they are on another point C, the other day on point F. So it's very difficult to trace them in terms of geographic location. So it's one of another challenge. Then the other challenge again, which comes from the people in the informal sector, they sometimes challenge the tax collector to say, if you collect tax to us, when you come to our operating stores or the market, there are no services at all that are provided by the taxpayer, sorry, by the tax authority or government, in the form of, say, there are no toilets, there are no roads. So what is the morale of us as the informal sector paying tax to just pay and you take money somewhere? So that's one challenge again that we see among others.
We did an assessment to know what are the reasons that inside people working in the informal sector do not pay taxes. And we have many reasons based on a diagnostic. For reasons, you can have the system is very complex. It's very complicated to respect fiscal obligations. The reason is that it's not necessary to pay taxes for them because they don't see the drawbacks, the return of paying taxes. The reason is that we want, but we don't know. The reason is that we have many steps to do to respect a tax payment.
So what is the way out? How do we bring the informal sector into the mainstream of the formal economy?
So in the past few years, we see that the government, for instance, we have the Ministry of Small-Scale Enterprises, which overlooks those are in the informal sector. They've been trying to go the route of formalizing them. Because some of them were saying the There's bureaucracy and red tape in terms of the documents and processes that you go through if you want to be formalized and be taxed. So we have a ministry that they say they are going to try and lessen that and help those who want to become formal to be formalized. And also we have the Zimbabwe Revenue Authorities. They are also working hand in hand with the same ministry to try and improve the infrastructure in terms of having those that want to be registered and formalized. So it's one avenue through which the government has been trying to do. Then also they've been educating them to see the importance of the informal sector also paying tax, in that not alone will it contribute to the national pool in terms of resources, but the government promised that in future, once you start paying, we will also come back to you and give you some of the facilities that will help in terms of the environment, for instance, toilets, roads, and also infrastructure within the vicinity in which they operate.
And this from an official of ATAF.
So what is ATAF doing to ensure that the informal sector is being taxed?
I'm glad you're asking that question, because this is actually we entering a year-long project funded by in partnership actually with the African Development Bank, where we want for the first time to actually make inroads into the taxation of this sector, to actually equip the African Tax Administration with a guideline or a framework, an efficient framework to assist them in efficiently taxing the sector. So we will start with a series of expert meetings for data gathering, the informal sector's experts of our countries, and then we will also create a technical committee of those experts, and then together we will define a framework for an efficient taxation of the informal sector. So by the end of the year, we will be able to provide a guidebook or manual to our tax administration for an efficient taxation of the sector.
And once again, Mr. Logan Worth, what is the way forward?
First of all, harness technology. Almost every African citizen has a cell phone. Today, banking is done through cell phones, so you can have connectivity. So you can also have financial management and accounting systems where people do transactions and it automatically registers in an accounting system owned by the Revenue Authority. So one, leverage technology. Two, give the informal sector a benefit for the tax that they pay by building infrastructure where they can do business. And three, make sure that together with the formal sector, there's a fairness in the tax system.
At the end of it all, Tax Matters spoke to some of the delegates on their impressions.
After 3 days of brainstorming, have you got a framework for taxing the informal sector? And also, did this conference meet your expectation?
Yeah, I can say that this conference has provided the background or the basis on which now the African continent is going now to digest and come with the model which is working for the African. So this is just the beginning, and there's a lot of information is coming in, a lot of knowledge is coming in, because it has been now clear that there's no clear definition of what is an informal sector is. Because some of the experts, when you talk about informal sectors, they normally think of the small and medium business, but that's not really the fact. We have the informal sector even in the larger enterprise. So this is an opportunity whereby we can now start thinking on how we are going to tax the informal sectors in Africa.
Have you come up with an African model for taxing the informal sector?
Yeah, that is work in progress, but I know we have shared experiences, we have learnt a lot, we have seen where we have gone wrong, where we are going well, and I believe we are going to come up with an African model for taxation of the informal sector on the African continent, taking into consideration country specifics, because that one is also crucial. But it has really been a very good engagement. Insights have been thrown into how best we can try to tax the informal sector. But more research is also going to be carried out, and all the African continent countries will be involved. They will provide input into this particular aspect.
It is hoped that after the series of workshops will be held in other regions of the continent, ATAF will come up with a blueprint that will chart the way for the effective taxation of the informal sector. The day after the closing of the ATAF conference, Mr. Muhammad Nami was again on stage, presiding over the 2020 Corporate Plan Retreat of the FRS. Aside from his assumption of duty on December 19th and his meeting with top management staff on December 20, 2019, the Corporate Plan Retreat was Mr. Muhammad Nami's first meeting with his foot soldiers across the country.
This year's retreat is unique because it is the first to be held with a complete FRS board in place in the last 7 years. In 2019, the service achieved total tax revenue collection of 5.26 trillion naira, as against a target of 8.3, which translated to about 60% target achievement for the year. The performance was slightly lower than that of 2018, which stood at 5.3 trillion naira by 57 billion, or 1.07%. For the year 2020, we have a target of 8.5 trillion naira, which is slightly lower than 2019 target by 300 billion naira. The 8.5 trillion target is broken down into oil tax of 3.7 trillion naira and non-oil taxes target of 4.8 trillion naira. Looking at our performance in the recent past, one may look at the 2020 target as ambitious, but I can assure you that it is achievable, especially with the ongoing reforms and business reengineering that are taking place in the Federal Inland Revenue. We have agreed with my team that in the next 4 years, we will improve our performance on a long-term and sustainable basis. We have given ourselves a minimum target of $5 million staff to revenue ratio and 10% tax to GDP ratio over the next 4 years.
Opening formalities over, Mr. Nami presented the lead paper on repositioning FRS for efficient service delivery.
Since the year 2004 to this moment, the service has implemented various reform measures targeted at enhancing service delivery and tax revenue collection that will meet the needs of the government. Some of these measures have been very effective and others not. In the recent past, the service has been unable to meet its tax revenue collection targets. This is the key thing we want to discuss. We are in Federal Inland Revenue not just to earn salary. We are in Federal Inland Revenue not to get money to take care of our family needs. We are in Federal Inland Revenue not to fight for lots to travel abroad for capacity building. We are not in Federal Inland Revenue only to fight over concepts that surround federal character. We are in Federal Inland Revenue to work as a team. We must ensure we work day in, day out, so that the 8.5 trillion naira target set for us by the federal government of Nigeria is not only realized, but surpassed. As the representative of the Secretary of Government of Federation had earlier pointed out, with the professionals in the ministry department and agencies, they've tried without any good result other than to present to National Assembly a budget provision with a deficit of over 2.1 trillion naira. We can do it, generate the 8.5 trillion, possibly do more to see how we can do to bridge that unfortunate gap.
The full story of the 2020 Corporate Plan Retreat of the FRS will come to you next week on Tax Matters. Thank you for watching. Have a beautiful week ahead.